All is live and recorded. Ladies and gentlemen, my name is The Real AE, also known as Aaron Evans. Today we are having an amazing tax conversation. This is not the sexiest of topics, but there is a insurmountable amount of value and opportunity in learning that taxes helps people out. And also that taxes is the one topic outside death that will always be here. Believe it was Really, it was Benjamin Franklin that said there's two things that are true in this world: death and taxes. And he's absolutely correct, right? We can blame the taxation in the United States with Great Britain, the Great Britain in the UK, early settlement area, early um pilgrimage, then the Queen of England. Taxes were brought over from Europe. So taxes was a European based idea. Not saying that taxes were not around. Taxes have been here all over the globe. Africans use taxes, South Americans. Taxes have been all around the world. But the tax system that has been built inside the United States was an idea that was brought over from Europe, from the UK, and now we live in it today, and the IRS was created. Now, I want you guys to understand that in the United States, on average, the average American is going to be hit, involved, or will be paying at least up to 30 different types of taxes, from inheritance taxes to sales taxes to income taxes. They're everywhere. They live among us. And the one thing that I wanted to have this call today with my personal tax preparer is because you can't wait on taxes. You can't wait on them. We all know what tax season is about. And actually, 60% of Americans are actually afraid this year of filing taxes for their returns because of inflation, because of the recession. And we continue to rely on, not saying it's bad, but we continue to rely on H&R Block and TurboTax and commercials to, oh, just do your taxes online and we'll take care of the rest. When I like to argue that fact, because the more that I, as the individual, hardworking citizen of this country, the more that I understand the tax system, the more that I understand what I'm being taxed for, allows me to prepare myself, my family, and my children in the proper positions that allow for us to get the biggest set of returns. I just want to make a great example. This in the United States right now, tax season is the only time for roughly around 40% of Americans that they ever see a return on their money. I want to let you guys sink in. There's around 40% of Americans right now that wait on tax season because that is the only time of year that they get a return on the money. And I actually have some fun facts here about taxes that actually just want to set the stage and we can get this thing going. And it's pretty interesting when you look at it. So statistica.com reported, and this is an official site, you guys can definitely look this up. Statistica.com said that in the total, 59.9% of households paid income tax in 2022, right? And some interesting statistics as well. And we're going to dive into some different categories there. But what's actually super interesting is that in 2022, recently signed into law by President Joe Biden, builds a fairer tax code by raising taxes on the rich in three different ways. So you have to understand that the country itself is looking for opportunities to make money, right? Whether it's from deals overseas, from services and goods, and also from taxes. The IRS collected roughly $4.6 trillion worth of taxes last year. 4.6 trillion and over $400 billion was given away in returns. And what's so interesting is that in certain communities around the country, people make very tiny little mistakes when it comes to their taxes and not able to get, the largest return that they possibly can. So that's why today's call with my good brother, Mr. Mr. Elis Herring the third, and I really hope I didn't butcher that, but you can always correct me if I'm wrong. I wanted to set the stage for who this gentleman is. And so some quick facts about my boy and why I decided to, link it with him last year. It's just because of his results. It's because of his honesty. And to be transparent, he's a brother. He's a brother that looks like me who's willing to sit down and educate. So the average return is over $2,000. He's helped over 200,000 in tax savings slash refunds. And the average tax savings on amendments in the prior year filings is over $5,000. In last year alone, in his first year, I'm going to be very clear. Last year alone, in his first year of filing taxes to help others, over 104 clienteles, over 104 different clients, average return of 2K, $200,000 in returns generated, and he's helped file taxes in every single tax bracket that you can think of. So, ladies and gentlemen, can we please drop some fire emojis, ones in the chat for my good brother, Mr. Elias Herring the Third. What's up, my mans? How you feeling, dog? How you doing?
What's happening? What's happening? Man, I don't know if I can follow that one. That's about the best. That's about the best intro I ever got, bro.
Hey, man.
I gotta give you a kudos for that. I appreciate that, bro.
Of course, dog.
Lagging? I want to make sure I'm not lagging before we get deep into a conversation.
You sound good to me. If everybody in the chat could just drop some ones, how does he sound, ladies and gentlemen? Sounds good. Are we lagging? Are we having a little bit of technical issues?
I just want to be sure.
All right, we have a light lag. So if we have to repeat anything, we definitely will. We definitely have to repeat. The visual has a lag, but the audio, they're saying the audio was good. And that's always fair. If we have a visual lag, I can understand that. Not every time you have to see, you just have to be able to speak and be able to hear nice and clear. While he's getting everything set up, man, my boy, come on, Carlos, Moy, Quay, Cutest, my boy Ricky, Steph, TJ, Valencia, Zion, welcome guys. He's actually going to tap in with easy support. Someone add him as the pin and get him tapped in real quick.
Can you hear me?
Yes, sir. Loud and clear. How's that, family? I'm going to add the pin to it, so make sure if you see, you get a chance to see. Oh, yeah. Awesome. Oh, yeah. Awesome.
Just speak. Not working. Oh, I hate this. Hello?
Yes, sir. Yes, sir.
We're good.
All right, bet. Looks like we good, man.
What's happening?
Hey, dude,
So yeah, like Aaron was saying, definitely first year tax pro last year. I learned a lot of lessons, helped over 100 families. The main thing I would say was my bread and butter and why I'm here. My business's slogan is the helping hand is close to your heart on the left side. And I sign with my left hand, so I like to say anything I say, you can put my word behind it and I'll sign behind it. And I just like Aaron attested to, I like to make sure that my clients understand what's going on with their taxes and not just getting them a dollar amount, but them having a good overview of what's going on with these taxes and how they can prep through the year so that next tax season they'll be in the same good situation. Not everybody's gonna get a huge tax refund, which is actually good because guess what? If you're getting a small tax refund or you gotta pay taxes, guess what? That means you made more money. And that's the ultimate goal in this thing, okay? So, but understanding taxes is good because nobody wants to spend more money than what they have to. And basically the way I look at it, the IRS has the answers to the test, which is how much tax you're supposed to pay. But they never gonna tell you. And if you get the test wrong, they do something called audit you and smack you with penalties when you get the test wrong. So that's why, you have a chance to cheat and get somebody in your corner who's gonna help you fight and get the most out of your tax situation so that you're not paying unnecessary money. We all work hard for our money, so we should keep as much as possible. And that's really what I believe. And that's my standpoint whenever I'm going to do someone's taxes. I'm not there just to do their taxes and get the money back. I'm there to help them at the end of the day.
Say that slogan again. That slogan was hard. The whole left hand, the closest they to the left hand. What was it? What was your brand slogan?
So everybody who's taking anatomy knows, all my nurses and doctors in the chat, they know your heart is located slightly to the left of your sternum. I sign with my left hand, so I like to say the helping hand is closest to your heart if you're ever looking for it.
Oh, that is some heat. I like that. I like that, bro. I love that. Let's just dive right into it. So I wanted to organize this conversation into five different sectors. Number one will be 9 to 5. This is the typical American. And we got two questions for each one. So it's not gonna be overloaded, just two
Right.
questions each. So the
Yep.
first section is gonna be the 9 to 5s, W2s. The
Right.
next piece is going to be talking about trading in LLCs because, as you guys know, I trade. So the emerging of cryptocurrency stocks. And we'll talk about two important points there. The third one is going to be content creators. How do we find ways to write off our equipment, such as cameras, phones, computers, rooms, right? And,
Mm.
and then the last one is going to be for my LLC creators. Fun fact: in the month of December, the Bureau of Labor Statistics in the United States found out that over 463 LLCs were applied for in last month, a
That's
month
right.
ago, 400,000 plus. But over 46% of those are not going to last after 5 years. So you see, there's people who are willing to go for it, but they're not seeing the end result of it. So we're going to talk about those kind of tax implications because of the new, no business can be anonymous anymore. We'll talk about that a little bit. And then the last section is just going to be a quick Q&A. I know a couple people have a couple questions. We won't limit it to only really about 3 to 5 in that area. We'll allow people to unmute themselves or raise their hands towards the end and then allow them to have a conversation with you. So let's dive right into W2 9 to 5 side of things. So as many of us on this call do know or do not know that I work currently in the corporate world. I work for Chase. And I actually just received my W2 in the mail pretty recently. If first question would be, in the world of 9 to 5s and W2s, what is a common mistake that you see when it comes to those who are working 9 to 5 jobs and then filing taxes? What is something that you've experienced
Mm.
last year that you wish people understood this year about their W2s and 9 to 5s for taxes?
Okay, of course, of course, of course. I believe the biggest thing, it will always be the biggest thing, is the W-9. Whenever you first get hired to your job, you fill out a form called a W-9. Most people don't really know what it is or don't really understand. It's that sheet that says how many exemptions you should claim. Okay, so those exemptions basically mean people that you care for. So yourself obviously counts as one person. And then if you have children, dependents, those are other exemptions. So basically what that exemption is telling the IRS or your employer is that this is the filing status that I claim on my taxes. And different filing statuses have different tax brackets in which they're taxed at. So a single person will be taxed fully on their tax bracket. So let's say you're in the 12% tax bracket. You're going to pay taxes on 12% of whatever you make. So yeah, your gross income, let's say you make $50,000, you're gonna get taxed at 12%. 12% of 100 is 12,000. Half of that, 50. So you're gonna pay $6,000 in taxes. All right, that's a single person, one exemption. Okay, so what we're seeing is that people on their W-9, they file tax exempt a lot because people say I need to see all my money. I want to see all my money during the year. Well, I got bad news for you. That $6,000 you're supposed to pay on your $50,000 salary, the IRS still gonna get that $6,000 one way or the other. They the worst loan shark in America. You don't want to owe money to the IRS because guess what? They can go straight to your check and take it from you. So that W-9 filing is very important, claiming the right amount of exemption. So just a single person living alone, they want to put one for that exemption or zero. I personally put zero. I want to take as much money as possible. You can have it. I'm gonna get it back later on when we talk at the
Right.
end of the year. You feel me? So I give them their money. I say zero exemptions no matter what. And then as far as more than one exemption, that's when you claim your children. Okay. So when you go over one exemption, let's say you have 3 exemptions, you file for 3 exemptions. They're assuming that you yourself is one exemption and then your 2 children underneath you. So what they're gonna do in their calculations is they're gonna charge you your 12% tax and then they're going to subtract away your child dependent care credits, basically. So your child tax credit, they're going to subtract that away from your total amount. Okay, so through the year, they're going to do the math for you on your W-2s, and they're just only going to tax you as if you already got your child tax credit away at the end of the year. So let's say on that same $6,000 in taxes you're supposed to pay, let's say the child tax credit was $2,000. Instead of you paying $6,000 through your W-2 and them taking it out your check, you only pay $4,000 because they'll subtract out that $2,000 because you're not supposed to be paying that anyway. So instead of giving you a refund of $2,000 at the end, they'll just take it out of your weekly, bi-weekly, monthly W-2 instead of you paying at the end. So those tax exemptions, that tells them how much to charge you in taxes on each W-2, so that at the end it'll add up. It's not always gonna equally add up at the end. That's why you have a tax preparer to make sure it's correct. But filing with the least amount of exemptions on your W-9 is by far the most important thing you can do as a W-2 worker, 9 to 5, by far. All right. I know people want to see all their check up front, but I promise you it's gonna hurt in the end. You know what I'm saying? The way I say to look at tax, I look at it as a 0% interest loan to the government. You giving the money to the government on the front end, and they'll give you back what you weren't supposed to pay on the back end. Just look at it as a savings account. All that money is going into a savings account, and you'll get as much of it as you can back when it's time to file for your tax refund.
Yeah, and it's interesting because there is that societal pressure of seeing all your money up front right now because
Mm-hmm.
of inflation, this feeling of social norms and I gotta keep up. Things are getting more expensive, so we always want to have this tendency to I need to see it up front more because I gotta pay for these things. But that's where budgeting and really understanding what your money is doing, especially from your 9 to 5, right? They tell you what your salary is right when you get the job. And what I did, especially when I first worked at the company, when I first got my acceptance letter, is I mathematically sat down and said, okay, how much roughly is my check going to be? I immediately started thinking to myself, okay, what are some lifestyle choices I need to make a decision on? Because, like you just said, the IRS is going to come and get me any way they want to. They'll find ways. They've garnished wages before, they do it all the time. And I actually used to work in identity theft back in COVID when the IRS was tracking down identity theft. They was hawking people down for a while. So you're absolutely right. You don't want to run. You might as well pay it up front so you can be rewarded later. This is the one time delayed gratification is going to be your best friend when it comes to taxes. Somebody just joined late. I'm going to repeat the rules really quickly. We have 5 categories we're going to get to, 2 questions per category. And then at the very end, we'll allow for questions from the crowd. You can unmute your mic, raise your hand towards the end. So if you guys are hearing things that you're like, ooh, I need to hear that again, write that down. Have a notebook. So towards the end, we can ask questions. And I will be sharing his personal information as well. He's open. He's looking for new clientele to help. So I'm advocating for him. He helped me out. He's a great brother. So let's get into it. Second piece about, the W-9 and, W-2s, etc., is one thing actually about 401ks. I want to speak on those a little bit. 401ks and donations. A lot of people actually are looking for, they take their check and they put it into 401ks, IRAs, and life insurance policies, etc. That's a hot topic on social media. Hey, look at a
Right.
whole life insurance. Hey, you should look at a Roth IRA. If you put this here and you do that there, oh, I mean, your 401k is really a product from your job, and the more 401ks that your job offers, they get a big tax write-off at the end of the year, blah, 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 right? So my question is, with W-2, with as a 9 to 5 worker with 401ks, Roth IRAs, where do taxes become involved in that arena? Do we see taxes for 401ks? Do we see taxes in IRAs? If you don't mind just breaking down from your perspective, where does the retirement accounts that we put our money away every 2 weeks from our 9 to 5 jobs, where do those become a tax conversation in that range, if that makes sense? Like, where do we need to have conversation about tax implications on retirement accounts? What are some
Okay, good.
no.
Good. So to the IRS, that money that you put in the IRA or 401k, the reason they say it's not taxed or it's a hot topic as far as taxes, because as it's saving and accumulating money, you're not paying taxes on your capital gains each year. So an IRA or a 401k, those are investment savings accounts. So when you put money in there as a lump sum, the company invested for you according to what you decide to put in your portfolio, right? That money gets gains on an index level mostly. Most people have an index level, and then they have stuff on top of it that gains might gain more or lose depending on how the market is, right? So those gains are pretty much flat with a little bit of risk on the edge. You know what I mean? For some people who decide to put that in a portfolio. So as you're gaining money in that account, not just the money you put in there, the money you put in there isn't taxed. It's the gains. So as your money is gaining 10% a year, 15% a year, 20% a year, that's when the IRS wants to tax it. But they don't do that taxation until you like pull from that money. So as your account's building up, you don't get taxed until you make a distribution to yourself. Meaning, like this year, I changed jobs in the middle of the year, right? So I liquidated my whole retirement account from my old job to move it into another job, right? So whenever I did that, it's called a rollover. So when you take one retirement account and you just roll it straight into another retirement account, you don't get taxed on that because it's not income. You're just taking the money out to put it back into another savings account. You're just changing companies because of, your affiliations change, right?
Right.
But the part where it becomes critical is if you make a distribution during the year from your IRA or your 401k and you just pull the money to yourself. It's very important. It's in the top 5 of stuff I would say for W-2 workers. If you change jobs or you just have to, some big comes up emergency, you have to pull from your 401k, please, please, please tell your HR or your retirement investment company to withhold taxes for you because that money is taxed at 25%. Capital gains tax is 25%. So that money is automatically taxed at 25%. And when you pull it out early, they tax you on the whole amount. So that means the money you put in there and your capital gains get taxed at 25%.
Mm.
So that's how they penalize you. I'm not sure if people understand what I'm saying. So let's say I put $2,000 into my 401k during the year. And then it gained $500 in the year, which is crazy return, but it gained $500 in the time before the 6 months before I pulled it out, right?
Right.
Halfway through the year. So instead of them only taxing 25% of the $500 gains, like they would have if I waited to retirement age to pull it, they're gonna tax me on the whole 2,500. So that 25% changes from $125 on the $500 all the way up to 625 for the
Yeah.
whole 2,500. So that's the difference in math. That's $500 difference in taxes, and it's all gonna hit in 1 year. And you probably weren't expecting it because if you didn't withhold taxes, you just got that 2,500 in your pocket, and then tax time come, you got an extra $500 you got to pay in taxes that you weren't expecting.
And then you don't want to get in. It's funny. I actually did that as well. I did the whole rollover process before. I just didn't like the investment company that I was setting it up with, and thank the Lord they gave us options because some companies just automatically do it for you. And so, just a piece of advice,
Right.
family, if everybody works a job here in this room, you should know the name of the company your investments are going into. You should know them, and at some point, you need to call them. You need to understand their products and services. I'm not saying that to, you need to ask a bunch of questions. No, you need to gain understanding. Does that make sense? Understanding. You don't have to be perfect. But then the more you understand, the less you become surprised. A lot of times we get caught up because we get surprised. Oh, damn, like why am I not getting no bread? Well, did you remember what you did back in March? Oh no, you didn't. And that's where a lot of people get really misconstrued because our mindsets is too much in the moment and we're not in the preparation. Taxes is a year-long game. It's not it's tax season, I need to get my stuff together. No, it's a thought that you need to have at all times. Okay,
Right.
where am I going to get bit? Okay, man, I really want this brand new iPhone 25. I don't really got it. I'm gonna pull from my 401k, but wait, where is my 401k invested into? Drop a 1 in the chat if you know where your 401k is invested to right now. What marketplace? Drop a 2 if you don't know. Drop a 1 if you know the name of the company that your 401k is attached to and know what stock market it's in, or drop it to, you have no idea. You don't even know what the name of your 401k company. You know you have one. You know it's there. You know it exists, but you don't even know. Wasn't even thinking of exactly. That's right. That's why we're having calls like this, Molly. It's not even a thought. And because it's not a thought, people miss out. People don't know. And I'm only speaking from personal experience. During COVID, my dad made an M. Congratulations to him. He busted his butt from Home Depot and working multiple jobs. He saved. He did the thing that his grandfather told him. He saved and saved and saved and saved. Right when COVID hit, 400K gone. 400K right out of his 401k investment. Gone. Because people don't know that your 401k is attached to the S&P. Most 401k is attached to the S&P 500. Right? And because it's the S&P 500, that's where you're getting your gains of 8%, 10% every year.
Right.
It's not just sitting in a pool somewhere and just floating. It's actually putting it's going into an S&P. So for those, and it's so crazy, we're leading right into the trading conversation. For my traders, hello, you trade SPX 500 every single day? Your 401k is also being invested in the SPX 500 every single day. Your own 401k is trading in the same market that you are on MT4 or Trade Locker trading SPX. I implore you, and here's some homework. You need to go to your HR. What's the name of your investment company? Mine's Empower. There's also
check your exemptions as well. While you're there, check your exemptions.
Check your exemptions.
Please.
What are they filed for? It's little stuff, but this is where the difference between I get this much of return to this much of return. And for you, in inflation, in bills, in debt, it's a very big deal. And no, it's actually kind of funny. Your 401k doesn't have to be in the S&P 500. It can be in a trust. And that trust is in the S&P. Or that trust can be in pharmaceuticals. That trust can be in tech. You as an American have the power to tell your company where you want your 401k to be invested into. Do you want to just be in a regular trust that's just growing by the time you hit 59? No, maybe you want to put some in pharmaceuticals. Mine's mixed up. I got stuff in tech, pharmaceuticals, agricultural. I have my 401k is in a lot of different pools that makes
diversified.
Exactly. But you have that freedom. But how did I find out? I called them and I started asking questions about it. So guys, do that for yourself. Leading right into trading. We're gonna keep the ball rolling. That was great, bro. I love that. I love that advice, man. It's the little stuff. It's the little things. We pay attention to those, we'll be good. I want to speak to my traders. Capital gains tax, we spoke on it, is something that's very vital for traders. Now, I want to speak on the opportunities that traders have with getting write-offs. So write-offs is such a very sexy combo. Oh, I'll do a great one for you. I bet you everybody's seen that video of Grant Cardone with his daughter. It was like, if you got an apartment room and you put office on the outside, you can write off that square footage for your business. And right, but it leaves too many holes for explanation. So this is why I want to speak to my traders today. For traders, where do you see opportunities for us to maximize our tax opportunities? Is it in our equipment? Is it in, do we need to keep a P&L sheet? What are some things that you would tell a trader or somebody who invests in the stocks, forex, and crypto of things that we should be doing so we can be rewarded during tax season?
Okay, first of all, once you're a profitable trader, like I was saying before, capital gains tax is one of the highest taxes. The only thing higher than capital gains tax is the tax bracket over 650K a year and the millionaire tax. Capital gains tax 25%. So if you're a profitable trader, you know what I'm saying, you live off of trading or you make a good side income of regularly making profits in the market, you're gonna get what's called a 1099. It's called a 1099B, and it has to do with capital gains, money made in capital markets, money markets. So whether that be the stock market, like the S&P, like you were talking about, forex market, foreign exchange market, trading currencies, or like if people do options, that's the
Stock option.
same realm.
Yeah.
Same realm. Yep, same realm. So any money made like that will automatically be taxed capital gains of 25%. So just like I was talking to the 9 to 5ers about setting yourself up with your W-9, when you're a trader, you need to set yourself up by putting money into your tax savings account. Okay. Or better yet, way better actually, you can make quarterly tax payments, income payments like a self-employed person to the IRS as a capital gains earner. So the way you do that though is just log into irs.com. They have what's called ID Me. You use your ID, scan your face. I know people are scared about the big brother situation. Look, it's gonna happen. If they want to find you, you're
They'll
on
find
facial recognition already. You there. You got an Instagram with over 100 pictures. Okay.
you.
The facial recognition has got you already. Okay. So log in with ID.me on irs.gov, and they have make quarterly tax payments button. I promise you, it's easy to find. I promise you, they will help you learn how to pay them their money. Okay. So if you're a profitable trader, let's say you make $10,000 a month, capital gains tax 25%. Every month you go to IRS, make your $2,500 payment, and just put it away. You know what I'm saying? Put it away early. You don't have to worry about it. Or if you're responsible, you lucky, you know what I'm saying, that you have good, discipline and everything. You make your $10,000 profit, you celebrate it, pop a bottle, put your $2,500 to the side before you go buy another section, okay? Put your $2,500 to the side. You got to pay taxes in January. Just put it to the side. Be cool. All right? Keep trading each month and you're good. All right? Online account. There it is right there. Uh, and once you log in, you'll be able to see your balance and everything, and then you can navigate to the page to pay quarterly tax. I believe you go to the home page, there's a place to pay for it. You can just click a button and then it'll take you to the appropriate spot.
Make a payment right here.
Yep. And then once you go in there, you say what you're paying for or just income, and you can make a payment, just a general payment, and they'll put it towards your tax bill. So just like your W-2, how it says how much taxes you paid through the year, the IRS will send you something like a W-2, which details all the taxes you paid in, and there you go. And then now, just like W-2 earners, you'll have a little piggy bank of taxes paid in during the year for you to either get a refund from or just to suffice for the taxes you should have been paying during the year. That way it's not like Aaron said, the only way we get upset is by surprises. Most people, if you know you're about to get hit in the face, you're gonna brace for it. Okay. You're gonna have your mouthpiece in, right? Now, if you got braces, you don't got no mouthpiece in, somebody come cold cock you from behind, you over with. You're gonna have a bust up mouth and you're gonna be knocked out. So, this is about putting our mouthpiece on so we're ready. And then they punch me like, man, you hit like a girl. You feel me? So no disrespect to my ladies. Okay. I said like a girl. Okay. Like a girl, not like a lady. Some women here are. So, but yeah, it's just about bracing yourself for that impact. You know what I mean? So that's the first thing I would say. And then as far as write-offs, that is a sexy conversation right now going on, how traders can get write-offs. But the main thing I want to, curb that enthusiasm with is that if you're just a trader, like I said, that counts as capital gains. That income is capital gains. So you can't just write off things just because you're a trader, right? And have an
Right.
independent business. You have to set up a business, even though it doesn't have to be LLC to use what's called a Schedule C as an independent business owner. You have to be pursuing profit as an educator or selling a trading book or selling merch attached to your trading entity. It can't just be you using your skill to gain money in the market because that's seen as a capital gains. People who make money off of capital gains, that's seen as a passive way of making income. Because
Right.
let's say I'm a billionaire and I got hundreds of millions of dollars in the market. So every year I get paid dividends without having to do nothing, right?
Right.
Millions of dollars of dividends. That's a passive income. So you can't take write-offs off of passive income. You have
Hmm.
to be actively pursuing profit. That's the key coin term. Remember that if you don't remember anything. Pursuing profit qualifies you for a Schedule C. Schedule C qualifies you for write-offs. Pursuing profit equals Schedule C. Schedule C equals write-offs. Okay. So with that, my traders, I implore you, post it on your social media. Not your, thank you. Very good. All right. So now post it on your social media. Now you're an influencer for trading, for advice, investing advice. You have people coming to you. That's the way to make income, okay? Or pursuing income as an influencer. Then get you some writing materials, some reading materials that you put together. What's your trading plan? I know any trading coach is gonna tell you what's your trading plan. Stick to your trading plan, right, Aaron? Write that trading
Every
plan
day.
down. Write that trading plan down and make it shareable. Charge $5 for it. Now you have a trading business that's pursuing profit, not only in the money market. Now you can take your write-offs, okay? Or get you a group together, okay, where y'all go out and let's say it could be, you know what I'm saying, a group. And now you're, charging people to help them trade, learning about trading. That's pursuing profit in the market, okay? Or if you just way off, like I said, back to the influencer bag. Let's say I don't know if y'all in the community like that, but like FX Alex G or Lambo Raul,
Mhm.
they make money from YouTube because they have so much money. They have a lifestyle brand now. You know what I mean? Where people watch them just because of their lifestyle and want to see in a day in the life. Get into that lane. It's a bunch of different ways you can make money. Obviously, if you're a trader, you're a hustler. So monetize yourself in some other way besides just trading, and then you could take write-offs.
I love
As
that.
far as those write-offs, they're limitless. Like you said, that square footage in your house where your trading room is, okay, that's a write-off on all your bills and rent. Just use a simple formula. Let's say I got 1,000 square foot apartment. I use 500, 250 square feet for my office space. 25% of all my expenses, according to my apartment, is tax deductible according to the IRS. So the keywords for what's tax deductible is necessary and regular for your business. Okay. So me personally, I'm a caterer. So my truck is necessary and regular for my business. So I write off mileage, I write off oil changes, so that's maintenance. And I write off repairs, that's maintenance for my car, right? As far as supplies, pots, pans, chafing dishes, anything that might be used in the kitchen, I get to write it off.
Mhm.
You feel me? When I go buy propane tanks, write off. Big, huge equipment burners. I just got a Blackstone. All the different stuff is write off. Traders, your ring light, your iPhone, your iPad, your computer, your second screen, all the decor that you use in your videos, your uniforms for your videos. Make sure you buy stuff with the mindset of a tax write-off, because guess what? After I use this, get up to speak in front of you guys, that's tax deductible. But guess what? I still got the clothes. That's the hack. That's the hack that they're talking about. Okay. Just make sure that it's necessary and regular for your business, and you good.
I love that, man. And I want to reiterate again, this is not, remember, you have to be pursuing profit. So I want to, I'm calling a shot. For those who are in IM Mastery Academy or in IML, like myself, this is why you become an IBO. Does this make sense? The moment you become an IBO, all of your events, all of my trips, all of my Zoom calls, my content that I'm making, the podcast that I have, I'm educating people and they're joining my IBO business. That allows me to write stuff off. If you are
Okay.
just a regular customer in IM, you don't get that benefit because you're just a trader. You just put money in the market, you'll get charged capital gains tax like everybody else. But if you're looking to evolve and get the returns on the effort of you prospecting, hosting events, running events, going to events, and it's not just for my IM people, my Envision You people who are on the call, all of my network marketers, all of my credit people on the call who do credit services, all of my people who do trucking, all of my people, and I'm speaking highly level topics that are super popular in the Black community. What's up? Network marketing, credit, trucking,
Barbers, hair,
barbers.
nail tech, any type
Yeah,
of any type of My thing is I'm a master of finding a side hustle. America is made for the hustler. You get tax benefits for being a hustler. And they understand that it's hard. So that's where the write-offs come in. That's where the write-offs come in. Being a hustler pays dividends. Not only on the front end of getting money, but on the back end of having tax breaks. Okay.
Yeah, and what I would recommend for people who are like, man, I didn't even know that. Sit down. We'll work with where we list here. Sit down, write a list of things that you think you can write off. You might not be able to, but shoot, make a list. Man, write stuff out. And then at that point, you can have a prepare, go through your list and go, okay, this one we can't. Like that one's not gonna work. But this one we can work. This one we can do. And then moving forward, that's you can start to even track it. And that goes right into our next point. But he's the man. Can we drop some fire emojis for this guy? Golly. This is some fire. This is value on a Friday night. I love it. I love it. Can we drop some fire emojis, some energy, man? This is some great stuff. Who's learning? Who's gaining some value? Who's learning something? Who's thinking to themselves, let me figure some stuff out. And this leads right into that whole opportunity of running a business. We spoke on LLCs. 400,000 LLCs were filed and applied for in December of 2023. We know that 45% of them are not going to last past 5 years. How important is to you as a tax preparer to make sure that people's LLCs are filed correctly on the front end? How big of a deal is that to you?
Okay, so for a small business under super small business, sole proprietorship, hustle type business, under 100K, I would say under 50K, no employees or one employee, you want to make sure that you have a regular single member LLC. Because once you move into a multi-member LLC or a corporation, I know people say, go get your S Corp, put it in a trust, da-da-da-da. But once you move into that realm, now you have to have a board of directors, you have to have W-2 employees, and then with those W-2 employees, you know how on your W-2, they withhold taxes? You have to do all that paperwork as far as paying income taxes and paying the like Social Security tax, paying all the wage and tax benefits. All that stuff that you see on your pay stub, when you become a corporation owner, you have to pay all those things during the year in what's called payroll. You know what I mean? And you can ask anybody who works in that sector of their business or that sector at their job, it's a headache.
Right. And you're right on that, man. It's a big headache. So
If you're not ready for it, then don't jump into that realm. So a correctly filed LLC, and guess what? For a Schedule C, you don't even have to have an LLC. You don't even have to have an LLC. You just have to be them two P words, pursuing profit. Pursuing profit. All you have to be is a hustler. That's it. You qualify. But now, whenever you ready to take that step, ready to form your LLC, make sure you start on the correct level. Don't go jumping into the big leagues when you playing with a T-ball bat. It's not gonna work. You feel what I'm saying?
yeah, it's starting off small. Just understand the game because he's right. It's so funny. I was just thinking about that. I can name 5 influencers right off the top of my head about, oh, I got this. I'll do one. Bella Sloan Enterprises, for those who might know, or Him 500. Him 500, Bella Sloan Enterprises. Ernie Leisure. Great guys. Love the trust. Waka Flocka. Everybody knows that Waka Flocka interview on the Breakfast Club where he talks about he's with Donald Trump. It was Donald Trump was telling him how all these different plays. Being realistic, a lot of us do not have the income and the structure to pull that off. And we get trapped into the idea that, oh, I got to do all that stuff to have generational wealth. But what they're not telling you is right here, this tax issue. If you don't do that right in the front end and you don't understand it, you are surely going to bite yourself in behind later. So, like he said, to get that Schedule C, keep track of your stuff. If you're ready to go into LLC, I believe there's 2 people we want to talk to right before you're gonna get when you get your LLC created. Your tax preparer should be one of the first people you should start talking to. Hey, I just got my LLC. I just got it. I haven't spent a dime. What should I be looking out for? What are some things I need to be taking care of? What are some things I need to be tracking along the way with my LLC? Because you just formed it. What can you do to prepare yourself for tax season? Have a conversation with your tax preparer, have a conversation with either a financial coach, financial advisor, and have that stuff ready to go. Those are two big combos, man. So anything
One
else?
of the, one of the biggest misconceptions I would say is that the difference between a hustler and an LLC owner is nothing. People say, "Do you do business taxes?" They ask me all the time, "Do you do business taxes?" I'm like, "Yeah, I do." Do you have a corporation, multi-member LLC, or do you just have an LLC for yourself? I just have an LLC for myself. I say, well, that's the same thing as Schedule C. Same thing as somebody without one. You know what I'm saying? So don't get ahead of yourself is basically what I'm trying to say. Don't hurt your brain, wreck your brain trying to go take further steps than what you need. Take the steps to get to where you want to be, and then you move into that corporation to where now you're making $100,000 a year in a sole proprietorship LLC. Now you need to switch to a corporation because you need to hire some people to get some of the tax breaks of having W-2 employees. You feel what I'm saying? But as a single member LLC, it's no point in doing that. You know what I mean?
Yeah, you're exactly right. So the lesson for this one, guys, and I want to do a quick little recap, and I actually want to give a very special shout out. We actually that is so insane. I don't if you guys don't know who this woman is who just joined the call today, she is the big head honcho, Miss Bree Johnson. Another amazing woman. You guys, I'm gonna share her social media. You guys definitely need to follow her. Definitely follow my boy. But she is a wizard of TaxWiz, one of the biggest tax companies, was on Silicon Valley. It was awesome. I'll give her flowers a little bit towards the end if she ever wants to come up and speak and provide some game for everybody else. But just to recap, my W-2 employees, look at your tax exemptions, look at your 401k investments. What company are you invested with? What kind of market they invested in? What are your tax exemptions? Your W-9. What are you exempt for? Are you filing that area correctly? For my traders, there's a difference. If you just purely trade, capital gain tax for 25%, you will be affected by. But if you're in the pursuit of profit, that is where write-offs can step in. So if you're not in the pursuit of profit, do not expect write-offs just because you are a trader. That's not how this works. You need to be doing something extra. Content creation, making little flyers. I'll give you a great one that I saw. Homie on TikTok, right? Homie on TikTok, through the TikTok shop, was selling his compound spreadsheet for $5.99 straight from TikTok. There's an opportunity. On Instagram, you do an advertisement, ad revenue. For what? Your event that you're going to be hosting to teach people how to trade. That's pursuit of profit. But if you just solely trade, I apologize. You got to do the research on the capital gains tax. Know what you're plumbing in. And then remember, go to the IRS website, do the ID facial scan, log in, and you can make quarterly payments based off of what you're making off of trading. So all my funded traders out there, my 25K, 100K, 200K funded traders, I'm talking to you. All my, hey, I put $100, $200 in the market and I'm growing it and I'm withdrawing it out of these regulated brokers or with Trade Locker. I'm talking to you. All of my people who got Coinbase and all these little digital wallets, I'm talking to you. Your taxes are involved in this stuff. Keep up with something I do. I have my own P&L sheet. It keeps me up. Where do I kind of gauge? Track your trading, follow your trading plan, budget and track. So that when it's
Also, on
yeah,
those sites, sorry to cut you off, bro.
yeah,
I
go
just
ahead.
had to catch you. On those sites, they have your 1099B. They have a summary. So you can just go and look at a summary. It's on different spots in different places. But on that site, if you go to the 3 lines of the menu, you can find reports. It's probably under a tab called reports or yearly summary or something like that. You can go on that site and easily look up your earnings. You know what I mean? They have to provide it. You feel what I'm saying? So you'll have a record and a ledger of what's going on, so you can at least start right now and we're on a clean year now, but you can at least go look at it. And they should be sending you a 1099 if you made over 100 transactions with them or you made over 20K. Those that are filing. And guess what? Even if let's say you sell that digital ebook and you take payments through Cash App, if you make over 20K or do over 100 transactions business wise on Cash App, they're gonna send you what's called a 1099K, which just got made last year, in 2022 tax year. where they have to report that to the IRS now, those online payments. They're cracking down on sending money online. Yep, Venmo as well. Any type of online payment, Venmo, PayPal, Apple Pay, Zelle, all that. All of that is regulated. They'll be sending a 1099-K.
Yeah, so be on the lookout for those because I definitely got. I know, I got some Cash App stuff coming my way myself. I use Cash App regularly, especially when I buy Bitcoin to fund my trading accounts. You feel me? I pay my fire guy in Bitcoin, so those transactions happen. And then moving into the LLC side, remember, there's not really a difference between a hustler and an LLC owner. If you're just a single party LLC owner, you're really just looked at by the IRS as somebody who doesn't have it. There's not really too much big of a difference. Not
Sophisticated hustler, that's all.
Yeah,
Hustler with paperwork.
it's just paperwork. And if you're not in the if you're not in the position to get an LLC, do not get pressured by social media and all those big influencers. I'm not saying that the value is not good. That's not what I'm telling you. It's good value, but it may not be for you. You may not even be in a position to get that stuff because sometimes all value is not good, right? If you're not in the position to open a trust, don't do it. You're not there. You're not in that position. It's good to know because we're trying to get there. But right now, maybe you just need to get maybe you just need to start back and just maybe you need to start at ground zero with your 401k and get an understanding of that. Start on the ground, work your way up, and you'll be surprised how many little holes in your own financial journey that can be filled in with this information. And now you can be benefited in tax returns. And now you got those super big returns. Now you can start paying off your debts, raise your credit score. That helps your funding. That gets you a better trading account. Now that can get you, and so those little things add up. So pay attention to those things, man. You know, in the last piece I want to speak on, I know we are in a very digital era and we as individuals are surrounded by information. We're swallowed up by news reporters, journalism. I graduated school of journalism, so I study this. I'm looking at people are scared, people are worried, and there's a lot of emotional attachment to money. I wanted to ask you, what are a few things or a few things that you see in your clientele that um maybe a fear that they had, maybe a misunderstanding on a topic about taxes? What are some misunderstandings that you want to kind of debunk today that can help us find a little bit of ease when it comes to filing taxes? Like, what are some things that you've either seen on social media or you've heard from your own clientele that you've kind of had to debunk or break down to gain understanding about taxes? What are some things that you've seen? And it could be on anything.
Hmm.
Just from your
A big one in our community is, claiming children, claiming dependents. The more dependents you have doesn't necessarily always mean the best tax situation. Because that tax credit is slotted. So you'll get about $3,000 as far as the max credit you can get for the first child, and then it comes down a little bit to 5,000 with two, and then the max with three kids is only six. So if you have, children and you have a blended family situation, it'd be intuitive and smart for you to allow the other parent to claim that child because they, rather than you going from two to three, which is a $1,000 difference, if you allow them to claim the child, their baseline credit max will be $3,000. So that's a $2,000 difference where if you're not being selfish, you know what I'm saying? The family makes more money in tax time, has more money coming in to start the year or start the year off jumpstart, right? The other one I debunked already as far as LLC and hustlers, the difference there, or if I do business taxes, it all goes on to the Schedule C. And then also another one I debunked already is the traders. Trading in the market is only capital gains. It's not pursuing profit through a business, selling products or services. You have to sell products or services and pursue the profit in order to be a Schedule C earner, to qualify for write-offs. What else? What else? What else? Just some small things like you get extra deductions. Oh, this for my regular W-2 people. No side hustle. You just go to work, come home, take care of your kids, take care of your family. Excuse me. let's say you deductions most people would know about, or the regular Jackson Hewitt or HR tax preparer might miss. You know what I mean? We have what's called the Schedule A. So every year, the the IRS gives you what's called a standard deduction. So remember, I was talking about the person who makes $50,000, right? They'll pay $6,000 in tax with their 12% tax bracket. Okay, cool. The IRS says, okay, look, we know through the year there's some basic living expenses you have, right? So we're gonna give you what's called a standard deduction. We know you didn't just take home $50,000 and spend $50,000, on whatever you wanted on commerce, right? So we'll take away a standard deduction, being fair, because we know it costs to live in our nation, right? Inflation, all that stuff. That's why every year the standard deduction goes up. So they'll say baseline, we're going to deduct $15,000 from your income and then tax you that 12%. So instead of that whole $6,000 that you paid on your W-2, they're only going to tax you on $35,000 of that $50,000. So that brings your tax bill down right there. And then boom, that's where a tax refund comes into play, right? Cool. So a tax hack that we have as tax preparers and me myself employ is the Schedule A. The Schedule A is where you try to beat the standard deduction. So just like right off from the Schedule C, the Schedule A is a regular person's Schedule C. Deductions are for the regular 9 to 5 person. That's how they write stuff off. It's just a specific list of things that you're able to write off. So I'm gonna give you the major stuff that can really cost. You know what I mean? These are called above the line deductions. So above the line means above your standard deduction. Below the line is write-offs. Okay. So above the line deductions, we got medical expenses. So if you got a above the line deductions, okay, these are things that can be used to beat your standard deduction so that it goes up without having to utilize write-offs. Okay, we got medical expenses. Let's say you're on dialysis, right? You're an older person or somebody who needs dialysis to live because of a chronic illness. You go back and forth to the dialysis station a lot, at least once a week, more than once a week. Okay, boom. That's back. That mileage, medical mileage, is it medical expense? All your prescriptions, let's say you're diabetic, you have to purchase insulin. We know that insulin is sky high. One, because of inflation, and two, because they have a monopoly on who makes insulin in America. Pharmaceuticals is, a big business in America. Insulin is high. Every prescription you pay that you had to pay out of pocket besides your insurance, medical expense. Okay, stuff like that. Think of people who have chronic illnesses or have something that they deal with on a regular basis as part of their lifestyle. That's a medical issue, and that medical expense goes with it. Okay, medical expenses, big thing you can pile up. Okay, especially somebody who has a chronic illness. Ties to a church or donations that goes on to Schedule C. So if you donate to Goodwill, they give you a receipt, keep those receipts. That money is tax deductible. Okay. They say it's tax deductible for a reason. You support fundraising in schools, tax deductible. Okay. Let's say you're a homeowner. Homeowners are clients I love because you save them money and they don't really realize it. You get a form what's called a 1098. That details how much property tax you pay, and it details how much your mortgage interest was. Mortgage interest, they count it as a cost of living. That's an above the line deduction. People pay thousands of dollars in mortgage interest every year to their mortgage company. That gets tax deducted. Okay. And remember, all this stuff builds up until we go over the threshold of that $50,000 of the standard deduction. So everything we're doing is trying to beat that standard deduction. Because once we beat that standard deduction, that brings our income down and our tax bill is lower. Lower income tax. Okay. It's called income tax because it's based on your income. So we're trying to bring our income down as much as possible. So these above the line deductions help us do that. Okay. Another thing besides real estate taxes, mortgage interest, medical expenses, tithes and donations, they have I said property taxes, real estate taxes, state sales tax. So when you go swipe that card, it says 10% for sales tax. A good rule is called the 10% rule because we get taxed on every transaction, right?
Right.
I know people have seen that meme like I got a paycheck and they taxed me on it. I went and bought some food with it. They taxed me on it.
That's,
And then I got to
yeah.
pay income tax at the end, right? Well, guess what? Three of those taxes out of four is tax deductible. You feel me? So the tax you pay on your house, the tax you pay on all your purchases during the year, that's tax deductible. We're gonna build up and beat that standard deduction and bring your tax bill down.
And it's out of and it's 50,000 is the mission. 50,000 is the goal. And the more we get after that, and that's based off of, does that depend on people, or is that a standardized, is that a nationwide number for the IRS is 50,000, or is
Well,
that number vary with like above the
so
line deductions like that?
no. That's anybody,
Oh,
anybody. But the thing is, the thing that's regular and standard is the standard deduction, which is it's about $15,000. It's like 14,900 this year, I believe. Last year was 13 something. So it goes up every year. It's about 15,000 this year. So that's a good, smooth, rounded number for people to think about. Okay, is my real estate tax, my mortgage interest, my tithes, my medical expenses, does that add up to more than 15K? Excuse me. And then somebody said they take it out of their check. Could you specify what you're talking about? And then I'll elaborate on what I'm saying too.
yeah, and actually, just it's perfect because we wanted to roll into some Q&A. I know I had Miss McCain had a question. I know my boy Q has some questions. So I want to give Miss McCain the floor. She was the first person that messaged me and said, "Hey, I got a question." So Miss McCain, I think you have the ability to yeah, you have the ability to unmute. So feel free to speak. I'm gonna change this to gallery view so everybody can have a chance to. But thank you for being here. Yeah, it's awesome that you're here. I love the fact that you're here. It's nice to meet you. Please ask away.
Thank y'all, and thank y'all for doing this. My question is, if I have a home, and we LLC the house, since we're gonna be renting a portion of it out, the utilities prior to us LLCing it, can that be written off, or is it just the utilities and everything since the date that we LLC'd the house?
Yeah, so good question. Great question, actually. It will be since y'all LLC the house and started to try and like I said, pursue profit with the house. And the major thing with real estate is really like the biggest tax hack because whenever you buy a house, right, the IRS is gonna write off like 25% of the house in the first year through depreciation. So the big expense for your tax, your tax situation is gonna be depreciating that house. So whenever you, as soon as you put that asset as a business asset, you're gonna get a huge tax write-off where the utilities that you pay for before you start renting it out is gonna be an afterthought. So when you put that depreciation on there, it's gonna be a huge tax write-off. And then especially in the first year, you're never gonna pay off, the house in rent income. So like that's why real estate is such an amazing thing because when you if you have a loan, right? And let's say you refinance to buy another house. When you refinance to buy another house, that money going into a loan. So that income that you made to buy another house is not taxable. So now you got this whole other house. That's a whole nother expense that you're gonna be able to write off on your taxes, right? As a real estate investor, that huge write-off is gonna be put against little to no income from the asset itself when you're getting rent in. So let's say it was a $400,000 house, you're gonna get about $100,000 write-off from depreciating that home, but you might only made 25,000 in rental income. So that's a huge chunk off your personal income, and that's going to basically alleviate your tax obligations. That's why real estate is such a powerful tool. That's why I said the rich get richer because once you get into that realm of diversifying your investing, like the tax benefits are insane. You know what I mean? So, and at
And
that point,
then,
that's when
well,
it becomes a game. Go ahead.
thank you. And then my other question is, one, we had to renovate the roof for the house when we LLC'd it. So how would that work as far as if we can write that off for taxes? And then my spouse is also in school, and I know that I've heard talk of like education expense or education like credits, but if he just started his undergrad, like how does that factor into everything?
Okay, perfect. So, um, I'll start with the roof. So, as a real estate investor and rental property owner, I'm guessing you guys. So there's small things you need to qualify to be an active pursuer as your property manager. You have to have over 250 hours on the year of being, working with the property, whether it's collecting rent. There's a list of activities which count. So collecting rent, overseeing the construction or renovations, and things like that, site visits, right? And then once you get that, now you can write off all this stuff on your Schedule C and Schedule E as a property owner. And with the roof, since it's such a big improvement, it's what's called a capital improvement to your structure. So that's actually depreciable. So you can take that whole chunk. Let's say it took like $12,000, right, to renovate the roof. Instead of you taking that whole $12,000 as 1 year of like 1 year of 1 year of a tax write-off, putting that whole chunk on 1 year. Because remember, we had the depreciation from the house, right? So we already have a huge chunk. So let's be smart about it and split it up. So now, since that's a one thing, you can depreciate that capital improvement because it was a capital improvement for the function of the house. You can depreciate that renovation like it's another house or a project. You can depreciate that. So now instead of doing 12,000 1 year, you get 4,000, 3,000, 2,000 in a year. So you spread it out over 5 years, if that makes sense. So that's what with my property owning clients, that's what I tend to do. Capital improvements to the house, I always depreciate them because they have such huge write-offs with the property itself. You know what I mean? So I want to split up their write-offs so that they can have them for years to come. Because what the problem is with real estate, once you get years in and the property is running itself, you don't have any write-offs to claim anymore, right? Because you're not having to do as much. So you want to save those write-offs for as long as you can. So I always try to use depreciation whenever I can with property owners. And then as far as the college student, if he's starting undergrad, then that means he'll qualify for the American Opportunity Credit because he's still in his first year as an undergrad and he hasn't graduated. So what'll happen is he'll be able to write off. Uh, First of all, his school will send him a 1098-T, which details how much money he paid to them. But what most people don't know is that outside education expenses like your computer, your Wi-Fi in your house, your books that you have to pay, your check, so you can get help on them quizzes. All that stuff is qualified education expenses. So that builds up to your $4,000 limit on that American Opportunity Credit. And then what they do with that is they split it up. So they give you $1,000 of it as a pure credit, which is $1,000 on your refund, and then they give you a tax deduction of the rest of it. So out of the $4,000, they give you 25, not 25, $3,000 as a tax deduction, right? Then they give you $1,000 as a pure credit, dollar for dollar on your tax return.
Thank you.
No problem.
That's game. Good. Okay. Okay. That's my point still exactly like that is cooking. I didn't even think about that in college, man. I wish I knew that. Is that American college credit? I know this is a sidebar. Is that college credit like new, or has that always been around?
Nah, I mean, it was definitely around when I was in school.
Man, I should have known you at school. I should have known you because I didn't get one refund in college because we paid exact. We paid the exact amount. I've been blessed for my student loans. I only pay $102 a month on my student loans, so I've just been blessed. But
Loan interest also tax deductible too.
oh, all my student loan people who got student loans, that loan interest, go ahead and call them up. Be like, yo, who is this? Anyway, I got my boys. So I wanted Ms. Hernandez to clarify her piece. You said they'd be taking out my checks. What check specifically? So he wanted to answer what check specifically, if you don't mind speaking on that a little bit more, and then I'll let Q ask away. Oh, your work checks. Oh, okay. Gotcha.
Which tax? She said that whenever I was talking about sales tax. So, okay, I got you. When I was speaking about sales tax, she said they take it out your checks. So what they're taking out your check is your state income tax. So your state income tax is what they're taking out your check, and that your federal income is not taxed on that, if that makes sense. Like your federal income is, that's factored in your state tax. So you pay state income tax to whatever state you live in, then you pay federal tax to the US government, and which are totally separate things. So that state tax that you see, that's going straight to your state Department of Revenue. And then the sales tax that you also pay is going straight to your Department of Revenue in your state. But the thing that most people don't know is that sales tax is a above the line deduction. So every time you go swipe your card and you're like, man, they took taxes out of my check. Now I got to pay taxes on stuff I buy. Well, now you know, because of the left hand man, that sales tax adds up and you can deduct that as an above the line deduction. So remember, with the above the line deductions, we're just trying to beat the standard deduction that the US gives us automatically.
Okay. I know in Texas we don't have a sales tax. I think Texas doesn't have a sales tax, but for other states,
y'all don't have state income tax.
state income
Y'all
tax.
still have tax.
Yeah, the state income tax. So,
But every other tax in Texas is higher. Property tax, all that tax is way higher. So that's where you get it back.
Yeah, exactly. I wanted Q. I wanted you to step up to the plate, ask a couple questions, and then we'll have Moy ask away, and then we'll be all finished up.
I'm not even gonna lie. Do you want Moy? Okay, go ahead. My fault.
No, you good. I'm putting a link in the chat for people to sign up to connect with me. It also comes with a discount, which you'll see once you get on there. And then I'm also gonna put my Instagram handle and everything. Just if you have questions, I'm always open to answer them. No charge or nothing. Just ask away. You know what I'm saying? I'm here to help at the end of the day, even if I don't do your taxes.
What I was gonna say, Aaron, is if Moy or Carlos could go first, because I'm not gonna lie. If you look at my list, bro, I'm not gonna lie. I got some questions, my brother. So I want to give everybody as ample as much opportunity as possible. Or if you want me to go right now, I can, Aaron. Whatever works for you.
You're muted.
So I would say, Moy, go ahead and ask your LLC question. If you want to, feel free to unmute your mic or ask away in the chat, and then we'll let Carlos and we'll let Q finish it off. So go ahead.
Hello. Can you hear me?
Yep. Here you are.
Thank you for having me here. So my question is regarding the LLC. My father owns a landscaping company, and right now we're peaking around from 150,000 to 200,000 per year. And we still haven't acquired our LLC, and we're trying to acquire it this year. And last year in 2022, he also got a house, and the mortgages are $3,000 per month. On top of that, insurance, like you said, mortgage insurance and everything else. So my question was, what should we do? Or should he get a single member LLC? Or should he get a business LLC?
Yes, great question. Great question. So with your dad, with that much gross income, and then with the landscaping business, I know a lot of people who do that. And that business is structured where you have regular employees, right? It's a very regular business, very much subscription based, but in the real world, not on the internet, right? So you guys are going around to different yards that you cut every 2 weeks, or maybe you cut them every week, depending on the neighborhood and the HOA or whatever. So that's a very regular business. So it's very safe for your dad to go and get a LLC where he will be able to easily do payroll. And then not only that, it will help him to track what he's spending to his employees, because it'll be a regularly occurring thing to do payroll, and they'll keep track of that within his payroll system, so that whenever it comes around, he can easily pay his employment taxes to for his employees. Because once you say you're a corporation, you're responsible for paying in to income tax, Social Security, and state tax for your employees, right? That's why you have a W-2. So once you start issuing W-2s as somebody who employs people, you have an obligation and responsibility to report to the IRS how much they're making, and also pay their income taxes for them, and also pay their Social Security tax for them, and their retirement and stuff like that. You have to provide healthcare, retirement, and pay their income taxes for them, okay? Under the discretion, okay? So that's the only thing. It's gonna come with some responsibility, but in the end, it'll be more tax breaks for him, because instead of just writing off how much he pays the employees and contract labor, so however much he pays his crews or whatever, he'll be able to also write off Social Security tax. He'll also be able to write off healthcare expense and all those different things that he'll need as a corporation business owner. So
Okay,
he'll
okay.
get more tax breaks because of that. And then he'll be able to write off filing fees, paying quarterly taxes, all those fees, paying an accountant, a tax preparer, officially do his taxes. That'll be more expensive for him to reduce that income sum and not pay so much taxes out of pocket.
Okay, thank you for answering my question. Because right now we're working with our DBA, and that's the only thing that we have. But we are proceeding with the LLC because you just clarified a lot of things. But I just have a little question about regarding the house. Since he just got the house last year, could he write it as a write off once he got the LLC? Because we're using it as like the main office and the main shop right now for the company.
Great question. Great question. So yes, what you will have to do is denote a specific place and area at your house for storage of your equipment and as the office space for the business. And then you use basically you take the percentage of the house that you're using for business, and that's what you're able to tax deduct as far as your mortgage, because you're renting. Like, let's say you pay you said $3,000 for a mortgage, right?
Yes,
Let's
correct.
say the square footage of your office that you use, and let's say a big barn or something or a metal building that you put outside the store your lawnmowers and stuff in, weed eaters, whatever you have, right? Let's say you put all that on the outside of the property. So let's say it comes out to 33% of the total property, right? You'll be able to write off a 33% of all your expenses. So 33% of that mortgage, you write off $1,000 a month for you renting your house out to your business as a place of business, because it's real estate that you own and your business is using it separately. So you take the deduction in that way. You take a percentage of the total expenses for the amount that you're using towards business. And that's how you take deductions against your house as a business owner, especially and only when you use your house for business like that. So that's how you write off. And then in addition to that, you're going to get the 1098, regular 1098, no letters at the end. And that has to do with your mortgage interest. Your mortgage interest and your mortgage insurance points. It's called points against your mortgage. That is above the line deduction. So that doesn't have to go on your Schedule C. So what you do is you let that be a part of your Schedule A, what's called your Schedule A deductions. And then you allow the other stuff, like you can't write your pure mortgage off on your Schedule A. So that's where you put on your Schedule C with your business and your K1 when you get your court. Okay, that's where you write those expenses off, your utilities and stuff, your mortgage interest and your mortgage insurance and your real estate taxes. That goes on your Schedule A as a part of above the line deductions.
Thank you, thank you.
No problem.
Awesome. We'll allow Carlos to come up, and then we'll move the queue, and then we'll sign off. Carlos, it's on you, my boy.
Hey, good night, guys. Thank you for having me. Thank you for this information. It's amazing. So I have I'm a trader, and right now I'm stepping into that profitable area of trading. Recently got funded, so the profits are going to be bigger.
A lot different, yeah.
Yeah, and so I don't have a business. I'm not really doing network marketing, but I do have a YouTube channel. And so the YouTube channel is close to being monetized. It's not monetized yet, but it's close to. So do I have to show proof that, does it have to be monetized for me to show that I'm pursuing profits, or does it not have to? Like, I could still show that, hey, I'm pursuing profits doing this, even though it's not monetized. And then can I write things off even if it's not monetized yet?
Great question. So with this, like I said, it's pursuit of profit. It's kind of vague, and the IRS almost makes it that way so they can kind of catch you up. But explaining it in pursuit of profit, like Aaron said, 46% of those 463,000 businesses that got filed in December, they're not gonna make it 5 years. So at the same time as them, being aware of like negative P&Ls as far as your Schedule C, they know that businesses struggle in the beginning. So if you're starting up a business, you bringing in all this special equipment so that your YouTube looks good, right? High definition 4K videos, that stuff costs money. So even though you're not monetized yet, you're still in the pursuit of profit because you have to have all those advanced features to attract people to your business. You get what I'm saying? So for the first 2 to 3 years, you're able to take a negative Schedule C because they know you might not be making profit right off. You're going to be using your W-2 income and other incomes in order to fund your business to get it going. You get what I mean? So when you write off those things, write-offs only matter whenever you have a bunch of money or not that much. Because if you don't have not that much money, your Schedule C is going to be negative because you're not making a profit on your business, like you're talking about your situation right now. So those capital gains income that's over here with trading, your negative write-offs from your YouTube is going to offset that income from capital gains to bring down your total income sum. You get what I'm saying? But they understand your YouTube business isn't just taking off skyrocketing. So that's where the tax preparer, helps you out because we understand that, you know what I'm saying, it's a fine line of like, okay, you've been making a negative profit for 5 years in a row. Why you still doing business? That's what the IRS is gonna think when they look at your file. So me as your taxpayer, I know, okay, like, bro, we took a loss 2 years in a row. Like, we're not gonna take a loss on your Schedule C 3 years in a row. That's weird. You feel me? So that's where tax strategy, tax planning, and having a tax preparer in your corner comes into play. Good question though.
Thank you so much, man. I appreciate that.
For sure.
Awesome. Yeah, because I actually have a YouTube as well, just similar to Carlos, podcasting. So definitely for my podcasters, for my YouTube, my content creators who are buying microphones right now. Look, mic, monitors. I got a camera in here, like all those little things that we do, guys, to inspire. We want to put people in a position to learn how to trade, as we should. Pay attention to the things that you can find those opportunities to pursue profit. And then last but not least, I got my man Q. I know you got a few questions, man. Let's lock into 2. His time is precious, and I want to be able to let him go. But please ask away.
All right, I apologize, Aaron. I got 3 for him. These three
That's
are
cool.
super
Hey,
important to me.
you
I
good?
apologize. I got 3 for him.
I ain't in no rush. It's all good.
Okay. My first question is a question you might have already answered already, but I just want to get like a deeper understanding because I've talked to somebody that does taxes, but the way it was explained, it wasn't explained all that well. So if you currently have a single member LLC, something we've been talking about during this whole call, and the LLC has not seen any profit as of yet, what is your recommendation? And I'll preface this question by saying a lot of people have said, and my tax preparer before this, my uncle that now works for the IRS now, actually said that if your business is not seeing up to $600 in profit, it does not make sense for you to be filing your taxes. But the reason why I'm asking this question mainly is if you're taking your W-2 income and putting it in your business bank account to, pay your expenses or pay whatever it is you need to pay in pursuit of profit, what do you recommend if the actual business itself is not seeing profit? So I hope that question makes sense. Hopefully.
I get what you're saying. So as far as like advice on filing a negative Schedule C, like I said, just to Carlos, it's just, you got to make it make sense, man. Like, if you pursuing profit, then you got to get some profit at some point. You know what I'm saying? So the main thing I would say as far as like just business owner, entrepreneur to entrepreneur, hustler to hustler, and then also from a tax mindset, use those things you're trying to write off as taxes, really use them to get profit. You know what I'm saying? Like once you've written off that phone and that ring light and stuff, man, put that stuff to use to really expand your business. You know what I'm saying? And then you'll make a profit. You know what I mean? And then as far as filing it, if you filed a negative Schedule C for a couple years in a row, then yes, it'll be better just to hold some of those expenses, because what most people don't know also is that you don't have to file all your expenses in that 1 year. You can file them the next year, as long as you have proof. You get what I'm saying? Like, let's say I had a bunch of expenses in 2023 and I didn't need all them expenses, right? Let's say I had brought my income down to zero, which probably never happened, but let's say I had enough write-offs to bring my expenses down to zero, right? I mean, bring my income down to zero. Then I'm like, man, I might want to save that $5,000 trailer I bought for cooking for next year, because I don't need it on this Schedule C, because it's no point in taking all them write-offs when, you know what I'm saying, it's unnecessary. So I'll save it for next year. You can save those expenses for the next year. It's only 1 year though. You can only carry them over for 1 year. It's called carrying over your expenses. But that's how I would answer that question.
Okay, but just kind of to make sure, does that basically mean you should still take the time to sit down with somebody and do some sort of tax preparation, whether that Schedule C is going to be negative or whether it's going to be positive?
Yeah. If you can
Is
afford it, or
what
if
you're
you can
saying?
get somebody
Okay.
to just have a conversation with you, like me, like, man, I get on the phone and have a conversation with you and answer your questions. You know what I'm saying? They don't charge me nothing.
Okay.
Like I said, I'm about help. Like once I'm actually filing your taxes or doing the action for you, then you know what I'm saying, money for my services is involved. But like as far as answering the question, or you say you got an uncle that work for the IRS,
Mm-hmm.
yeah,
Yeah, I
uncle
talk
is
to,
about
I talk to man all the time. So,
help. Easy, you know.
yeah, my second question now is, I had a retirement account with this popular app called Acorns, right? So,
Right.
okay, first, I'm going to preface this question by saying I'm in the military. That's first. So, I want to ask you a specific question about that first. Is there any tax incentive? Is there anything for being in the military at this current time?
Military employees and military service members are the only group of people in the United States who are allowed to write off travel expenses as regular W-2 earners. So when you get stationed in a different base and you got to move your whole family, your whole house to a whole nother base across the country, you're the only subset of people who gets to write off those travel expenses as a regular W-2 owner. Now, if you're a business owner, you can write that off some. You get what I'm saying? But
Mhm.
you like military people are the only group of people who have a whole form dedicated to deducting their travel expenses.
Okay. Cool.
Because Uncle Sam know that y'all have to move. So
Cool. Now, something I just did pretty recently with you answering that question, something I just did pretty recently is I wanted to move away from Acorns. I already have TSP with my military affiliation, but I wanted to move away from Acorns and put my money in the S&P. I just felt like it would make more sense for me. Just for me, I just did some research and I felt like it would make more sense for me. When I withdrew the amount that I had in Acorns, it sent a specific message that kind of made me kind of worry a little bit. So I want to make sure before I just take that money and I don't know, go dump it into the S&P or go ball out. So when I took it out, it said there could be possible tax implications. So I kind of want to understand, do you have like any knowledge or anything that I can kind of use going into this tax season for the fact that I took that money out of Acorns and I'm moving it into another entity for it to grow?
okay, cool. Great. So with Acorns, that is the same thing as trading, MetaTrader, Coinbase, Cash App, buying crypto and holding. That is the same. It's stock trading. Okay, so that would be on what's called a 1099B. So they sent you that message because you have what's called a realized gain. While you're having money in Acorns, that gain is not realized. What realized mean is that you got the money in hand. You feel me? So if I go buy a stock right now at $100 and it go up to 10 million, if I never pull the 10 million out, that gain is not realized yet. Once I say, okay, give me my 10 million, you know what I'm saying? So I can show everybody I'm the greatest stock trader in the world, right? Give my 10 million. Now that 10 million is realized because I got the money. Okay. So now they're gonna tax you on that. And that's gonna go on your excuse me for forgetting the form, but that 1099B is gonna come to you. Okay. The 1099B is a summary from whatever, from all the entities. So Acorn sends 1099Bs. I put them in before. It's gonna go on your capital gains worksheet, and it's gonna list out every single stock that you had in that Acorns account. And when you realize the gain, they're gonna say your sale price, and then what you acquired it for, your acquired price. And then that gain is gonna be listed on the side, and it's gonna add it up and tax it in capital gains tax. So you're gonna get taxed on that because you was trading in the stock market. You feel me? Now when you put it in your 401k, if you take it out of the 401k, you can denote that you want them to withhold taxes before they send you the money. They still gonna send you the money, but they're gonna withhold the taxes first, so you're not hit with it at the end. But Acorn's not gonna do that. They just gonna send you the bread. You feel me? Now, some stock trading platforms will withhold the taxes for you, but you're gonna have to. They make you go hunt for it. Just like HR make you go hunt for exemptions and your W-9, you got to go to HR to fill out the form. Same way the stock company, they just want to send it because it's less hassle for them. They just want to send you the money. So they're not just gonna give you the option straight off, or they might not offer it at all.
That's why you
Got
want.
it.
That's
I got my last two, A. I got my last two, and I'm gonna leave it alone. I got my
yeah.
last two.
I want to add. I want to add to that stop piece,
Go
Q,
ahead.
because a lot of us are here. A lot of us almost all follow each other, and we kind of all follow the same kind of people. And be very clear. This includes Webull. This includes Robinhood. This includes Fidelity. This includes Public. This includes Coinbase. So as a great homework piece, go do the research. Do they do tax withholdings for these brokerages that you're dollar cost averaging in? And I only say this because in April of this year, the Bitcoin halving is about to happen. All of my crypto investors, and you're doing the right things, you might see the biggest return on your investment that you ever seen. We're talking about taxes now because guess what? All that money you're gonna make is gonna be unrealized until you make the withdrawal in September, November at the peaks of the prices. So just pay attention. Does Coinbase do tax withholding? That's something you want to look up. What about crypto.com? What about Kraken? What about, Robinhood? All those ETFs that BlackRock and the SEC got passed. Do those have tax withholdings? These are things we have to pay attention to because then when it's time, we don't want to be bit in the back end. I didn't want to cut you off, but that's a big event coming up in April that all of us are going to watch and witness. The news is going to talk about it. People on Twitter are going to talk about it. Oh my God, bro, look at look at, bro. Oh, I'm rich. We lit. Not yet until you make that withdrawal. Then you rich. So we have to just pay attention and not get caught in what social media is going to do in April and put my name on it. I know my boy said, yeah, put my name on. I stand by what I say. I bet people money in April, we are going to watch it happen. And by January in 2025, a lot of people are going to be real mad that they didn't pay attention and understand that capital gains tax that's going to be
They're
affected.
gonna be like, man, I gotta pay $8,000 in taxes. You ain't got none of them 20 bands that you made in September no more.
You got none of that money you made off of Ethereum and XLM or all this Nvidia or Lockheed Martin, all that bread you made. Now you're butt out. So, do research. If you guys are investing in brokerages, do the research. But Q, my fault. I didn't mean to cut you off, buddy.
You good, brother. If you do withhold that tax on the Acorns, if I were to know to withhold it, then what would you be doing as the taxpayer? What then would be my, I guess to say, process? Like what would it look like if it were withheld? If that makes sense.
So first of all, when I enter the capital gain on your tax return in the software, your refund, or either your refund gonna come way down or your tax bill gonna go way up. Either way, depending if you had a tax bill already, it's gonna go up. If you had a refund, it's gonna come down because you owe more taxes on them capital gains, right? But with the withholding, you're gonna be able to offset that because the IRS, like I said, if you pay the capital gains tax on your own through quarterly taxes, excuse me, the IRS gonna send you a form too that say, okay, this is all the money you didn't pay during the year. So, you know, like we're gonna knock that off of your tax bill. So what's gonna happen is I'm gonna put in your capital gains, right? And then boom, I'm gonna turn around and put in your prepaid taxes form from the IRS, and it's gonna reverse right back out. Feel me? So that's how the process is gonna work. But if you don't have no tax preparer, they're not gonna be able to tell you that like beforehand. You need to be thinking about that withholding, so it don't bite you in the butt later on. You know what I'm saying?
It makes sense.
So
It
that's
makes
the
sense. It
main.
makes sense. My last two. As far as crypto goes, and I'm happy that Aaron brought that up. And heavily investing into crypto because I'm a crypto investor. Once you do realize that profit, once you finally do take that profit, kind of what's the threshold, I guess, so to say. What's the okay, if I just go right now and I take, I don't know, $100 out the market. I don't know, maybe I made 10,000, but I only need $100 right now. What's that?
Right.
What's that threshold where it starts to be okay? They're going because I don't think they're going to charge me 25% on $100. At least I will hope not. I will hope the country ain't that messed up. But kind of what's that threshold?
So someone else was talking, but they said the $600 threshold, that's the first like weird. That's the first thing where it's like if it's $600, you're gonna get a 1099B for sure. Now, if your volume low and you might be taking like $1, $2, or you just clearing your account, sometimes like on Acorns, where people who just, recreational investors, they might not send you a 1099B. You feel what I'm saying? Because it's low. But if you go, my threshold is 100 transactions, because you a trader at that point. 100 transactions, $600 in volume, they most likely send you one. And then for the 1099K, like Cash App, like if you go over 100 transactions or 20K in total volume, they send you a form because they gonna get looked at wrong. You feel me? When they get audited themselves, so they gonna send you a form. So $600, $600, 100 transactions, or 20K on the high end.
And then last but not finally least, Aaron, and I'm done after this. With profit and losses, do you like does your losses in the game reduce your taxable like expense? Like let's say for example right now, right? I'm going crazy with a coin right now, and I don't know, news come out and a Solana it gets jacked up, or another coin it get really jacked up, it decreases in value. With that profit and loss, where's that like margin, I guess, so to say? Like let's say I'm up 20,000 on one coin, and a coin come in and crash me down like the 5. Where's that margin and how is that set up? And that'll be my last question. Hey.
So good. So it's once you, like I said, once you realize. So if you just holding it and it crash, it ain't gonna come up. But on that same capital gains worksheet and that 1099B, not only is it gonna say your profits, it's gonna say whenever you lost money too. Because like I said, it's gonna tell you your selling price and your acquired price. So if your acquired price higher than your selling price, it's gonna put a negative in there. So it's just gonna balance out. It's gonna be your net capital gains. You get taxed on your net capital gains. So you might have negative capital gains, in which case it will reduce your income like a write-off. Yeah. So
Thank you. Thank you.
Awesome. Well, family, this has been a plethora of value. This has been a plethora of value, a plethora of just gems being provided. Can we just give my boy a big like drop some fire emojis in the chat? Can you guys just show him some love? Like this is a guy who literally
I appreciate
by
y'all
his
so much.
like by his word, he just said it. This was for the free. Other people would have charged, but the fact that the value that he has, I will make sure that his information, if you guys want his link, can you mind sending the link to your link to me personally? I'll share it to anybody. I'll put it on my social media. Make sure
It's in my bio. It's in my
Bet.
bio, and I'm gonna put it back in here again.
Bet.
Anybody on here, I promise you're gonna get a discount. Trust me.
Yeah,
'Cause
tap in.
I freaking like I value people bringing me on and trusting me. That's my biggest thing. When people trust me, want information from me, and they see what's good, like I value that to my core. So, like I said, you're not a client with me. I treat people like family. That's what I pride myself on. So.
Yeah, I love that, man. And family, thank you guys so much for the time today. I appreciate every single one of you guys. I'm actually gonna save the form myself just in case, somebody be like, yo, bro, who was that dude? Where's this link or whatever? I'll make sure I have it as well. But thank you so much again, bro. I will be tapping it with you soon. I'm waiting on a couple more. I just got my form for my 9 to 5. I'm waiting on the rest of mine to come in, and then we're gonna get right after it.
No
So
cap.
so I love you all. I love you all, guys. Thank you so much for tonight. God bless you all. Have an amazing Friday night. Be safe if you're all going out. And side note, Luka Doncic just dropped 73 points on them boys in Atlanta.
Oh God. On to his Texas.
But anyways, peace out, y'all. Love y'all, gang. Be safe.